There are many challenges in budgeting and cash flow forecasting for not-for-profit, trust and other service-based organisations, including ensuring adequate and sustainable funding for all planned activities, ensuring the cost of services are kept within budget, managing the cash flow impact of capital expenditure and other non-operating costs, managing payroll allocations, reporting actual to budget, profit and loss and cash flows for multiple profit centres, and reforecasting. So let's look now at how Cash Focus could help manage these challenges for you. In this example, we're using the Service Edition of Cash Focus to model the operational activities and results of a large organisation that provides education and support services to its members. Key features of this model include the number of cost centres, the large chart of accounts, and the list of non-financial drivers used for their budgeting and forecasting. In the non-financial area, revenue and expense drivers include the key operational activities, the number of memberships and average fee, staff numbers, and capital expenditure. The objective here is to save time and effort from the budgeting and forecasting process by focusing managers' attention on their planned activities rather than asking them for fixed budget and forecast numbers. By linking all variable revenues and expenses to these drivers, the software can then calculate the budget and forecast resources required. Fixed expenses and payroll are two exceptions. They are normally excluded from the driver set unless any significant one-off events are predicted. In the revenue area, equations multiply the expected membership fee drivers to calculate forecast revenues. Here we can see an equation multiplying the expected members by average fees divided by 12 to accrue fee income across all periods. This enables what-ifs on membership numbers, fees, and the reporting of actual memberships and average fees received. Although revenues are accrued across the period they relate to, cash flow profile assumptions determine how the cash flows are to be received. In this example, we're accruing membership fees up to the end of each calendar year. Then if we view the profile, we can see that large percentages are being collected up front, with the residual payment being amortized over the membership year. Other revenues include government grants received for contracted services. Here we can see an example of government grants being received quarterly in advance, with the prepayment being amortized over the period it relates to on the balance sheet. Note the timing tick in the budget window. This triggers the cash flow part of the assumption. In this case, grants are received 2 periods in advance and are then amortized over the quarter. In the operational expense area, a big feature of this model is the payroll calculation and its allocation across all the profit centres. In this example, an Excel link has been made to an external payroll calculation and allocation table. This is for a number of reasons. Firstly, to maintain what is a very detailed and sensitive calculation outside of Cash Focus. The link enables the data to be updated by an HR manager without involving them in the workings of Cash Focus, to ensure the accurate personnel expense allocation by department, which is important for forecasting purposes, and then finally to match the account level detail in the ledger, which is important for actual to budget variance reporting. Other expenses include governance, staff training, travel and accommodation, consultancy, contractors. Now if we click on conferences and seminars, we can see that it is variable on the number of conferences specified in the drivers. The budget here is the expected cost of each conference. If we now look at reports, we can choose to view the profit centres individually, grouped, or we can view the total organisation. Let's first look at a merge of 3 profit centres. Looking at the merged report, we can see the effect of the monthly revenues and operational expenses, as well as the non-operational costs for a particular manager's responsibility. Looking at the entire organisation, we can see the result of all revenues, all operating expenditure, and including the end of year predicted position, which is made up of actuals for the first 5 months and then forecast to the end of the period. In the service edition, we can also pivot the profit and loss results around any folder level using the matrix report. This module provides many summary reporting options. Here we can see the results by grouped profit centre activities. This shows where the revenues were coming from and how they were spent. Here we can see the revenues raised for each of the conferences and then the cost of those conference activities. In the Enterprise Edition, the Advanced Reporting Module add-on enables the exporting of profit centre results to Excel workbooks. Here we can see a manager's responsibility and the supporting cost centres. This module enables multiple reports to be exported electronically to a specified destination. On the balance sheet report, we can see how debtors, fixed assets, creditors, and other liabilities are to be managed with the reserve accumulation. With the double entry nature of cash focus, the balance sheet always balances. In Cash Focus, there are 2 types of cash flow report. The result we can see here is the source and application of funds that reconciles net income to the closing bank balances. Positive balances are a source of funds and negative movements absorb funds. This answers the question where the cash flow came from and where did it go to. On the driver report, we can see actual memberships, average fees achieved, the staff to member ratios, and the capital expenditure plan and forecast. This provides a powerful view of the underlying activities behind the budget and forecast data. If you would like to know more about implementing driver-based forecasting or cash focus in your organisation, order a trial CD now. Thanks for watching. Bye for now.